Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson, making professional trading simple. Welcome to your Friday video. Had a nice run up right at the very end of the day. If you guys hear me chewing on something, I'm sorry. I've got a really bad cough, so I have a Ricola cough drop in my mouth right now, and I apologize if you hear it kind of clanking around in my mouth. Uh, End of the day run up. Had a subscriber write me and say, "Here comes the PPT." I do not believe that was any PPT action at the end of the day. That is usually a lot more obvious, and there would have been no real reason for any kind of movement from the PPT today because everything's been steadily moving up. There's no reason to pump money into the banks at this point. I do not think it was the PPT. I just think it was an end of day rally. Not surprisingly enough, one of my other subscribers did write and tell me that I did predict 11:45 by the end of the week, and we finished right at 11:45. So, pat on the back for Brian. He wanted my crystal ball. He can't have it. I'm keeping that for myself. So pat on the back for me. However, it is a bit lucky that it actually closed at 11:45. I did not call it to actually close the week at 11:45. I will tell you this: it is no there is no voodoo in why or how I saw 11:45 to 11:50 as the overhead resistance. It was actually very simple. Once again, for those of you that are interested in doing that for yourself, please talk to me about the mentoring classes. They are more than worth your time and money to learn that kind of stuff. It's not voodoo. It's just having the right education. End of the day run up right here in the Dow. Look at that huge where we just, oh man, it was dribbling sideways, doing nothing all day long, till we finally broke above this, until we finally broke and held on this 20 period moving average here on the 60. Eventually, that led to a quick increase at the end of the day. You can see where it put us on the Dow. Now, the Dow, I think, was only up, yeah, like 0.11%, if my numbers here are correct. Let me refresh. That is correct. The S&P was slightly stronger, and the Nasdaq coming back after a couple of days of kind of being behind the other markets, now ahead of the markets again today. So watching for a little bit of a push up in all of the indices at the end of the day. It did happen. You can see it pull back here, and then right at the end of the day, push up to new highs. I'm not going to get into a whole bunch of the specifics. I'll do that again on Sunday. Let's rip through this here. Still holding above support. As I keep saying, this looks just like another high base formation, and we have to treat it as such until it gets back below these bigger levels down here. This is just holding above support, basing sideways, looking for another push higher in the Dow. Nasdaq here showing a lot of strength as it held the 1870. Remember, I mentioned this yesterday. Notice how it came right back into support at 1870, held nicely, pushed its way up. Once it got up above these moving averages, that would have been a great entry for those of you that like to play the Qs or any of the other ETFs off of the Nasdaq. That was a great entry here. And at the very end of the day, just barely able to push back above these highs. Now, what does that do to the bigger picture? Look at what we see here. See yesterday how I said this shows a lot of strength. We've seen this blue trend line hold here, a touch here, a hold yesterday on the doji. Very interesting. This tail on the doji is of great interest to me because of what we typically see from bigger money. And then the run up today, a move down, or actually a gap down, run up, and finishing at the high, just above the high, but more importantly, above this support area here. So you can see, as I said, a move below and a close below this blue line is the first step before we get finally below 1860, but that might be a little while yet. Nasdaq on a weekly, pushing up, 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 and still showing bullish strength. It just still feels like it wants to be pulled right to that line. SPX on a 60-minute, you can see it well up and above this overhead resistance. I did make the mention that once we break 1135, my first target there was 1145 to 1150, but that it might not go there right away. It might stair step its way up. And that's what in this week is what we saw. We had this great push down, a hold of the 1130 area, and then a slow grind towards the highs. This is still bullish behavior. There's nothing broken in through here. It's just still continuing to find new highs in this market. From a daily standpoint, once again, up and above this overhead resistance, hold, move sideways, hold again the following day, and the push up again towards the 1145 to 1150 area. You can see here too on the weekly, now definitely closing the week up and above this overhead resistance as we saw on the NASDAQ. So a lot of the other indices starting to break these more major overhead resistance areas and being pulled towards where? Well, one can guess that I guess the next point for me to be looking at was if it can get up and over like 1160-ish. Why not make 1200 or even this 200 period moving average? I know that seems like a long way, but you know what? Who cares? Market's going up, it's going up. There's a lot of bears out there that are just frustrated at the market, but you've got to play the charts. You can't play your sentiment. Your sentiment makes no difference to the market. It does not care what you think. Doesn't care. Follow the charts. The charts give you all the emotion and give you all the direction you need to properly play the markets and be consistently successful at it. VIX on a daily, look how it crashed. It broke big green. First big green anyway. Broke this big green line that it had been kind of flirting with, finally touched it this week and now broke it, closed below it, coming right back down to the dotted line, which obviously is our first line of support, followed by this bigger green line of support. Now we're really getting into a complacency, for lack of a better word, within the market. I mean, the market's going up. Nobody believes this market's ever going down again. Perfectly, and it's reflected in the VIX. There is no fear in the market whatsoever. We will diagnose that a little bit more this weekend, maybe. Apple on a 60-minute.